that I've put together, and I will also be doing Q&A. So I think I'm going to be speaking for around half an hour, and then do some Q&A for another half hour. So state of the market, I guess one of the key things with the market at the moment is that it is a little bit confusing as to what's happening. I mean, on one hand, we've got the core logic numbers coming through showing that the market has really slowed. In the last few weeks, we've had highly variable auction clearance rates, which have kind of been up and down a little bit. And certainly on our site, we are seeing quite variable demand conditions. So we have been seeing very variable demand conditions across states for quite some time, but now we're seeing a lot of variation from month to month, and I'll take you through some of that data. So a lot of the information I'm using today is, sorry, I'm just trying to get my slide to be working. A lot of the information I'm using today comes from our site. So we have, so realestate.com.au site. So we've got 6.3 million people on our site every month. So they're unique visitors, and that's externally tracked. We have 6.5 million visits per day, and we have around, at any one time, around 17,000 property listings. So the way people interact on our site does give us a very unique perspective as to what people are thinking. So we know what suburbs they prefer, we know what type of housing that they prefer. We're getting really good indications as to how that's changing over time as well. So as policies are implemented, as prices increase, we start to see people's behaviour change significantly. And I guess the best thing about it is that the data is real-time data. So, we can get a fairly immediate snapshot from week to week as to how conditions are changing. So today I'm going to take you through that. I guess in terms, if you're an investor or you're a buyer, I guess some of the things that are really starting to show up are that suburbs where we're seeing a lot more people looking to buy compared to listings, not surprisingly, are seeing better price growth. We're also seeing like rental information, which I'll take you through as well, but a lot of the rental data is now showing areas where you're more likely to find a tenant, so you typically achieve lower vacancy rates, but there are also areas that typically do see greater rental growth as well. So a lot of the data we've started to find that it does flow through to financial metrics, which can help if you're looking to invest or looking to buy. So lots and lots of information on our site. We do have a very big property analytics team, and so I guess that's the other thing too, that although there's a lot of data, there's also a lot of people crunching all these numbers to provide some pretty amazing insights. So, sorry, my slide skills aren't that good. Okay, so in terms of what people are searching for in a home, there's three characteristics that really make up the types of suburbs where we find the highest level of engagement. So when we say engagement, it means the number of people looking at housing within a suburb, but also time taken to look at that, time taken on the site looking at houses in those suburbs. So without a doubt, when we have a look at what people want and the types of suburbs that they really want to be in, it has great retail, good schools and public transport are the three main ones. So typically suburbs with those characteristics will see very, very high levels of engagement. I think what's interesting though is being close to a CBD isn't that important for the majority of people searching on our site, and that's quite important, I think, in terms of investment in housing, but also in terms of where people will want to live long term. That being close to a CBD, although homes in those locations have historically done very well from a price growth perspective, but a lot of people don't really care if they're not close to a CBD. As long as they've got that great retail, good schools, public transport, they seem to be the three main characteristics. They still very much want really big homes, and when we have a look at the types of homes that people are most engaged with, they are big family homes. So 4 beds, 2 baths, 2 car garage, 650 square metres for a block, and they really want it for an affordable price. So the most the types of houses that people are most engaged with tend to be at around that $650,000 price point. So if you're in Sydney or Melbourne, you know that type of housing now is very, very difficult to buy. But certainly in other cities and in regional areas, that price point is pretty much on the mark. But Sydney and Melbourne now are very expensive, and those affordability issues are starting to change the way people interact on our site, the types of homes that they're looking for. Things are changing over time. I guess that's the other thing too, that people will make trade-offs. So they do want the big home, they want the big block, but if that's not available and they really want to be in a place with good retail, good schools, public transport, they'll make the trade-off and they'll move into they will look at smaller apartments and smaller townhouses. So again, when we have a look at the locations where people are looking for apartments and townhouses, partly it's due to availability of that type of stock, but also its characteristics of those locations do have those three main criteria. So there is a lot of consistency with the way Australians are looking at property on our site. So right now, as I mentioned before, the market is highly variable, and we are seeing a lot of choppiness in terms of demand. So the way that we measure demand is that we look at the number of people looking to buy and we compare it to listings. So you can see there on the left-hand side, that's our demand index that we've been tracking since 2013. And there's no doubt that Australians are property obsessed. You can see there that the index has increased substantially over time. There's been a few drops, but overall, over the past 4 years, we've seen this massive run up in terms of the number of people looking to buy. And on the other side, on the listing side, we've actually seen fewer properties being sold as well. So part of it has to do, the listings bit has to do with the fact that more people are holding property, and property is has been such a great investment for so many people. A lot of people have done very well out of it. They're either doing very well from a yield perspective, or more likely they have done very well from a capital growth perspective. So we've had this run up in people wanting to buy. We've had a drop in listings long term, and as a result, you can really see how property obsessed Australians are. This data is actually quite consistent throughout Asia. So this is a bit of an aside, but in Asia, we have iProperty in Asia, and we also see this characteristic that people have become more and more property obsessed over time. A very different situation in Italy. We used to own a site called Casa in Italy, and they're not property obsessed. And one of the reasons they're not property obsessed is that if you bought a house in Italy 10 years ago, that house is probably still worth less than you paid a decade ago. So people in Europe don't often, or many places in Europe, don't have the same confidence in property that we do, and certainly throughout Asia does as well. The US is doing better now, but again, it's only been over the past 12 months that people's homes have been worth more than they were prior to the GFC. So again, in the US, the obsession with property, it exists, but it's not as apparent as we're seeing in Australia. So property demand has increased a lot over time. It does vary a lot in terms of what happens with interest rates. So when interest rates drop, people will borrow more, and we see a surge in demand. And if interest rates increase, obviously more expensive to borrow, and we see a drop-off in buyer demand. So it was interesting at the end of last year. We saw this massive run-up in demand. I don't know if you can see it clearly, but around October, November last year, we hit a peak for that time, in the time series. But many of you remember in November last year, we had a lot of the banks start to increase interest rates independently of the Reserve Bank, and as a result in December we did see demand drop off, and at that time I thought that may be the peak. And the reason being is, banks are increasing interest rates. There was starting to be a lot of negativity around housing. APRA were continuing to come down hard on the banks to really start to get them to restrict lending, and demand backed off. and I thought, well, you know, maybe we'll start to see a slight slowdown in price growth. So it was interesting in January, demand picked up again. February this year, we hit another peak. We hit another peak in March. And again, in March, we started to see more and more negativity around the performance, you know, about the risks associated with such a strong performing property market. So, you know, risks around high debt levels, risks around bank lending. Banks started to continue to increase, they continue to increase interest rates independently of the Reserve Bank, and the media attention around housing, it really amplified. So again, not surprisingly, April we saw that drop off in buyer demand. But what was surprising is that in May, demand picked up again. So we are now sitting at another peak in demand. Part of it's been because we did see fewer listings in May than we expected. We did see a bit of a drop-off in buyer activity, but we also saw a drop-off in listings in May as well. So overall, there's still a very strong demand-supply imbalance, still a lot more people looking to buy as opposed to listings. So we're watching June very carefully to see what will happen. I think it's, you know, there's a lot of talk now that we are at the peak of the market. Our data suggests that we may be. CoreLogic's data suggests that we probably are. You know, clearance rate data is very uncertain. So there is all this data out there in the market at the moment that does make it very difficult for us to say definitively that the market has slowed, and you know, we're going to start to see a prolonged period of stabilisation in prices. Very different situation nationally. You can see that Tasmania continues to be a very strong market for buyers. So Tasmania is our most affordable state in Australia. It's the only state where a single person on an average income can still afford to buy a property. And to give you an idea, for those of you not familiar with Tasmania as to how cheap it is, Tasmania, the best suburb in Tasmania is a place called Sandy Bay, and the median price of Sandy Bay is $770,000. Compare that to the best suburbs in Sydney and Melbourne now, which are well over $4 million. So Tasmania is looking remarkably affordable. The way people can look for property nationally has obviously changed a lot over the past 10 years. And now people can really get a good sense as to what they can buy in Tasmania compared to Sydney, Melbourne and the other markets. So a lot of the interest in Tasmania is coming out of Sydney and Melbourne. It's also actually coming from offshore. So I've got some information, I've got some data a bit later on talking about Chinese buyers in particular. So again, we can track where people from overseas are looking for property. And we saw a really big jump in Asian interest in the Hobart market over the past 12 months. So a 70% jump in people viewing Hobart from China in particular. So very strong interest in Tasmania from overseas, but also interstate. Tasmania is a market you need to be careful with, though. It's a very small market. It's only 500,000 people, so it's actually smaller than Newcastle, smaller than Gold Coast. But one of the things with Tasmania, it hasn't seen much supply over a prolonged period. It hasn't seen much economic growth either, but the amount of supply has been far less than the number of people wanting to buy in Tasmania. So that's really probably the main driver long term of why we're seeing a real divergence with the number of people looking to buy in Tasmania. So you do need to be careful there. I guess another positive thing, I haven't put up the rental demand index, so we actually also see pretty strong rental demand in Tasmania at the moment. So again, coming back to those low levels of supply. New South Wales, Victoria, and surprise no one. I mean, obviously we've had very strong growth in prices in both Melbourne and Sydney. A lot of regional areas now in New South Wales and Victoria are also doing very well. A lot of it has to do with Sydney and Melbourne money coming in. But there's no doubt that they're the two economic powerhouses at the moment of the Australian economy, and that has really flowed through to our property markets. and it's really flowed through to affordability now as well. So Sydney in particular, I mean, analysis we've done has shown that to be on a average income in Sydney, you can't afford to buy a house or an apartment without being under mortgage stress. So an average or a price, a house or apartment priced at the median, you'd have to go under mortgage stress to housing stress to be able to buy or rent in Sydney at the moment. Melbourne's looking a little bit better if you want to buy or rent an apartment, but certainly housing prices have really rocketed up in Melbourne, and it is now a very unaffordable city. Very different situation in other states. Obviously, WA sitting there and Northern Territory both looking pretty tough at the moment. Perth, it's an interesting market in that, prices are still dropping. We're still seeing very low demand levels, but there does seem to be quite a lot of strong activity in those inner western suburbs. So places like Peppermint Grove, Peppermint Grove is the most expensive suburb in Perth. Prices have actually gone up quite a lot, so I think sort of 10 to 15% over the past 12 months. We're also seeing very strong buyer demand in those premium inner western suburbs in Perth. The other place that's doing pretty well in Perth at the moment are the northern beaches, so places like City Beach and Trig. We're seeing very, very elevated levels of both buyer demand and renter demand. So I think, the case with any market, it's not always even though the market overall may be doing very well or very badly, there's always variations within each city as to how performance is going. Northern Territory, we are starting to see a turnaround. Again, obviously a very small market, but we are seeing a turnaround now in demand. So we do think that overall the market does seem to be performing a little bit better than it was 12 months ago. Certainly Darwin, the northern suburbs of Darwin at the moment seem to be doing pretty well in terms of buyer demand. So strong variance across all the capital cities. Sydney, Melbourne, Hobart really the strong performers, and then WA and Northern Territory sitting there at the bottom. What's happening to the economy? I won't go into this too much detail, but obviously the economy is going okay. We still have very low inflation though. GDP growth is probably not as strong as a lot of people would like. There's rising concerns about low levels of retail spending. There's certainly not enough with the economic conditions of Australia at the moment to suggest that the Reserve Bank will be increasing interest rates anytime soon. If anything, they'll probably keep them stable, but they may even cut over the next 6 months. I think though the issue, if they cut, I doubt that that cut will be passed on to consumers. And at the moment, what we're seeing on our site is that buyer behaviour is being linked more closely to what banks are doing with interest rates as opposed to what the Reserve Bank is doing with interest rates. And there's no doubt that banks, Australian banks, or banks that lend in Australia, are on a upward trajectory with rates. So over the next 12 months, I do think it'll become more expensive to lend. It's also going to continue to be far more difficult to lend, and that's tough if you are an investor in property. Sorry, I don't know why the lights went out. I'll try and work that out. Rates are going. The bank rates are going up. I mean, there's a number of reasons why. Obviously, APRA have come down hard on banks to be more careful with their lending. Bank wholesale the cost of wholesale funds are going up as well. So around a third of the money that Australian banks lend to us as property owners comes from overseas. US rates now are on an upward trajectory. And then, of course, we have the banking tax as well. So that will also be another factor that will no doubt be passed on to consumers. And given that 70% of the loan book by our banks is with residential lending, that would probably be the easiest way to recoup that cost. So rates are going up. It will be tougher and more expensive to lend. And it should really start to continue to moderate that price growth that really, really strong price growth that we saw in Melbourne and Sydney over the past 12 months. I won't talk too much about the budget, but I guess it's overall is pretty good news. I mean, I think the thing that was upsetting a lot of people, particularly with regards to negative gearing, was that it felt like for many first home buyers and owner occupiers that they were on a very uneven playing field with investors. And talking to first home buyers in particular, one of the things that they found really tough is that a lot of investors are buying similar stock to them, similar types of housing to them, but they have negative gearing, they've got capital gains tax concessions, they're able to use their super. You know, there's lots and lots of incentives for them in the housing market that an owner-occupier doesn't get. So I think overall it was good news. It did put first home buyers on a more even playing field. There was a lot of measures to increase supply, obviously very, very important in Sydney, where we really don't have enough housing for the number of people that want to live in Sydney. Infrastructure spending, obviously always good for housing, also very, very good for regional markets, so particularly northern Victoria, that inland rail link running through New South Wales up to Brisbane, lots of jobs being created. Really, really good news for those regional areas that are very sensitive to population growth. There was a lot of social housing measures. I mean, I won't go into too much detail, but there's no doubt there was a lot of social housing measures, and they will be good because it's social. If you're someone on an average income and you're living in Sydney or Melbourne at the moment, it is very, very tough to get into the market. But I can guarantee if you're on a very, very low income, it's almost impossible to find reasonable accommodation. So that was very, very positive. Which state government is doing it best for housing? I mean, it is interesting looking at all the budgets coming out over the last couple of months. New South Wales budget coming out soon, very, very soon. But there's no doubt Victoria does seem to be doing it best for housing at the moment in terms of land supply, in terms of infrastructure, in terms of helping first home buyers, all those things that are really difficult for people. The Victorian government is doing it best. New South Wales government, they're trying, but it is coming after a prolonged period of undersupply in housing. In New South Wales, we've had 30% less housing developed than we've seen in Victoria, and it has led to a very dire situation with affordability and availability of housing. So right now, Victoria really is doing it best for housing. So some of the behaviour that we're seeing on our site, there's no doubt that affordability is changing the types of housing that people look at. Central Coast came up last year. We started to see a surge of activity on the Central Coast. A lot of Central Coast suburbs started coming up as our most in-demand suburbs. So that hadn't happened before. We've typically seen sort of northern beaches featuring very prominently. Inner West, lower North Shore, inner East, all those locations have historically done very well. But we started to see a change in activity as prices continue to surge in the Sydney market. So Central Coast came up last year. Demand really started to pick up. Prices started to pick up. Time on market started to drop. And so from that, we deduced that it was a lot of Sydney money coming out of Sydney, going to Central Coast, and there's likely a lot more people commuting from the Central Coast into Sydney. I mentioned Tasmania before, our most affordable state, lots and lots of activity too. Southern Highlands came up a bit last year. This year, though, it's all about Wollongong. So Wollongong does seem to be the location where we are seeing very elevated levels of demand. And it kind of makes sense if you are someone in the Sydney market and you are looking for, just say you've got, a very decent income, very decent price, amount to spend on a house. Just say you've got $1 million to spend on a house. The availability of something at that price point that offers great lifestyle elements is quite difficult to find. But go to Wollongong and you can buy something that's close to good retail, good shops, good retail, good schools, good public transport, and then you also get the beach as well. So there's the real strong water link that we find in Sydney, and at the moment a lot of that activity is heading up there to Wollongong. Victoria, Melbourne, we're not seeing quite the regional push that we're seeing in New South Wales. A bit of activity in Geelong, particularly locations that are quite close to the train station into Melbourne. But overall, Melbourne does seem to have enough affordable housing not to push people out into regional areas. So outer places like the Dandenongs are seeing very high levels of demand. The northeast corridor, sort of out through Montmorency, Briar Hill, Warrandyte, those areas are seeing elevated levels of demand. So I do think they're kind of the areas that are providing the lifestyle elements that people crave, the big homes that people want, but also providing affordability, which, you know, is ultimately what people want. I mean, no one wants a big mortgage, and that does seem to be showing up in the data. Overseas activity is really interesting. This is one I get asked a lot about because obviously we do have a very strong interest from Chinese in Australian property. But it's interesting looking at the way different countries look at the locations that different countries look at. So people from the UK, the number one location that they look at is Manly. People from Ireland look at Bondi. People from South Africa look at St Ives. So there does seem to be these really strong links of certain suburbs with people, property seekers who are looking from overseas. Chinese-based property seekers, Glen Waverley is typically their number one location, but there's no doubt that Chinese-based property seekers do have a strong affinity to the Melbourne market. So it is the number one destination for Chinese-based property seekers, and they're on our site. We see more of them looking in Melbourne than we see in Sydney, say, so we see double the rate looking in Melbourne than we see in Sydney. And I think a lot of it, though, has to do with supply, that at the moment there really isn't all that much to buy in Sydney for new housing, particularly when we compare it to Melbourne. We also see quite a lot of interest in Adelaide. I mean, it has dropped quite a bit, but we actually see more Chinese-based property seekers looking in Adelaide than Perth, which is a little bit surprising given that Perth has become a bit of a global city since the mining boom. So very, very interesting behaviour on site. I guess the main thing, though, is that, you know, a lot of people talk about a slowdown in activity from China. There's no doubt that it has slowed down. The rate of growth has slowed, but we're not seeing a drop as yet. But they are very sensitive to taxation, not surprisingly. They're sensitive to access to funding. So I think those two factors have led to a bit of a drop-off in demand. Hobart, you can see that massive jump that I mentioned before. A lot of people from overseas are very interested in Hobart at the moment. Hobart, it probably won't result in increased transactions. And the reason we don't think it will result in increased transactions is that we're not seeing much new development in Hobart. So as a result, it's not. There's really nothing for overseas buyers to purchase. So offshore interest is a key part of our market, and but you know we are seeing a bit of a moderation in demand at the moment. Right. So the way we measure most in demand suburbs is by looking at the number of people looking to buy in that suburb and comparing it to listings, and we do that for rental suburbs that are popular with renters. And we also do it for suburbs that are popular with buyers as well. So with renters, there's no doubt that the Gold Coast is the place to be at the moment. That when we have a look at the top 10 suburbs that are most popular with renters, 8 out of 10 of them are in the Gold Coast. So again, it partly comes back to those lifestyle elements that, you know, places like Kira, Tugun, Miami, really, really beautiful beaches, really great places to live. But particularly for rental demand, economic growth is a really big factor as well. That if you have a relatively small market and you start to see strong jobs growth, you have a lot of people moving there, and typically people, when they move to a new location, they don't buy straight away, they rent, and Gold Coast does seem to be a beneficiary of that. So Gold Coast is doing very well. The Commonwealth Games are coming up. There's a lot of infrastructure spending taking place at the moment, and the economy is doing pretty well. It is a market you do need to be a little bit careful with, again, because it's small. You know, it is bigger than Tasmania, but, you know, it's still in that sort of 500,000 number population. And it makes it a very sensitive market to high levels of supply. So, you know, at the moment, supply levels do seem to be fairly moderate. But if we start to see a jump in supply levels, that level of demand will start to come back, because we measure demand based on number of people looking to rent versus listings. So doing well at the moment. The other thing you do need to be careful with in the Gold Coast is that there's a big run-up with the Commonwealth Games, and when the Commonwealth Games complete, there may be a drop-off in demand. There may also be a drop-off in demand following, although there probably will be a drop-off in demand following the completion of that infrastructure spending as well. So Gold Coast, amazing at the moment. If you owned a property there, you'd probably find, particularly in these three locations, you're probably finding it pretty easy to find tenants at the moment. But it is a market that you do need to keep in mind, that there are a few things happening over the next few years that may impact that level of demand. Top rental suburbs, typically they do have very strong lifestyle elements. If you consider who does rent, it's typically younger people. So, you know, that 20 to 35-year-old age group does seem to be the most popular. And so the types of locations do seem to have lifestyle elements that age category really like. So beaches are very popular, great cafes, restaurants, and nightlife as well does seem to feature quite prominently. So in Sydney, places that we find that come out really on top in terms of rental demand, inner west Sydney, obviously, you know, lots of young people wanting to live there, and northern beaches come up very prominently. Melbourne, it does seem to be very much inner, although a lot of the very, very high levels of apartment development have moderated those high levels of demand. So some of that demand is pushing out a little bit. So Gold Coast is a place to be for renters, and when we have a look at buyers, it starts to get a lot more interesting. And I mentioned Wollongong before, and actually the suburb of Farnborough Heights, which is a fairly expensive suburb for Wollongong, not expensive when you compare it to Sydney, came out as our most in-demand suburb. So again, the way we measure demand, number of people looking to buy versus listings, that gap was the highest in Australia in Farnborough Heights. The Basin in Victoria coming in at number 2, so sitting in the Dandenongs. I mentioned before with Melbourne, we are seeing a very, 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 very strong demand now moving sort of northeast and east. So other suburbs that featured were places like Briar Hill, Warrandyte coming in, the Basin. Last year, the number 1 wasn't Farnborough Heights. The number 1 suburb in Australia was Kalorama. So Kalorama sitting there on the Dandenong. So there's no doubt that area at the moment does seem to be showing up as a location that a lot of people are really looking to buy in. Narrowena is there on the Northern Beaches. The Northern Beaches are really interesting at the moment because it is getting very expensive. Manly hit a $3 million median price this year, but there is still a very strong affinity for people in Sydney to want to live on the beaches, but they are moving to more affordable locations. So Narrowena and Allambie Heights both came up in the top 10 nationally, and they are on the beaches, but they're not right on the beach, and it does make them a little bit more affordable than places like Manly, which are getting very, very expensive. When we look on a state-by-state basis as to the suburbs that are most in demand from buyers, I mentioned before in Perth, it's very much inner west and northern beaches. When we have a look in Adelaide, it's very much the inner south, so places like Unley are coming up, but also a little bit in the Adelaide Hills, so Crafers and Hawthorn Dean both came up in the top 10 for people looking to buy in Adelaide. So Adelaide does seem to have a strong link to the inner south, but also obviously to the Adelaide Hills. Hobart, very much inner Hobart, and so much inner, it actually included Hobart CBD, and a few of the suburbs around there seem to be very, very high in demand. And then when we look across to Brisbane, we saw, when we look across to Queensland, when we look at buyer activity, it's not so much Gold Coast focused anymore. It was last year, but we are seeing people moving back to Brisbane and that area seeing very, very high demand. So again, very much an inner suburb push, people wanting to be close to the city. But also there was quite strong demand in the northwest. So people looking for big blocks and acreages, those sorts of things. We did see very, very strong demand levels pushing out there. Sorry, which one have I done it? Darwin. So Darwin was sort of a very small pocket to the north that we saw high demand. And then ACT was interesting that the top 10 suburbs in the ACT were all the north of Canberra. Ainslie was number 1, but we did see all price points covered. So from the much older estates that were built in the 60s up to the estates built in the 90s. So it does seem in Canberra that as long as you're north side, you are going to get much higher levels of demand. So I think that is done. Yep, that's done for me. So I might open it up. I'll open up some of the questions and run through those. So question from Richard, where can I access also some of the data analytics the REA team produce with the REA data? So we do publish a lot on our news site, and we do write data stories every 2 weeks. So the next one that's coming out is looking at commuter suburbs. So we've looked at the suburbs that are most in demand within 10 to 25 Ks of, there's the lights come back on, 10 to 25 Ks of the CBD, and just had a look at some of the characteristics of those suburbs. But we do those data stories every couple of weeks and try to look at different things that people may be interested in. We also cover off rental markets as well. So we've done quite a bit of work on people on very low incomes, where could they potentially rent without being under housing stress. But yeah, so we sort of alternate between sort of investor focused ones and also rental suburb ones. So a question from Ella. With a budget of 600,000, what suburbs across Australia would you recommend I buy an investment property in which will likely increase in value over time? I mean, I can't obviously provide individual recommendations, but I can say that on our site, Tasmania does seem to be seeing very, very high levels of demand, but it is a market that you do need to be pretty careful of because it is a very small market. Places that I would be a little bit careful in a Brisbane apartments, I think at the moment is one area that I'd be a little bit cautious of. We are seeing lower levels of rental demand for apartments in inner Brisbane, which I'm finding a little bit concerning. And Melbourne CBD is another one. So although the demand, it doesn't look like we're going to see quite the problems of oversupply with apartments in Melbourne at the moment, there's no doubt that it is impacting pricing for apartments in Melbourne. So prices do seem to be coming back quite a bit. Housing, obviously Sydney, if you can afford to buy in Sydney at the moment, there's been such a prolonged period of undersupply that most markets in Sydney have done pretty well. But obviously with a budget of 600,000, you are more limited as to be able to get into that market. One of the big drivers of price growth at the moment in locations outside of Sydney and Melbourne are areas where people from Sydney and Melbourne want to invest in. So it's been interesting looking at places like Albury at the moment that, it's a pretty small market, but it does seem to be a market that is attracting a lot of Sydney money. And we've seen quite strong price growth over the past 12 months. Newcastle's actually another interesting one that's is doing pretty well at the moment. Again, because we've got very little supply in that market, and we've got good economic growth, so that's really driving prices. So look, there are lots of options, but I guess you do need to consider firstly the economic growth profile of the area. What's driving the economy, what's going to drive jobs. That does seem to be a big thing. You do need to consider also the the level of supply that, you know, a market like Gold Coast, although it's doing very well at the moment, you know, if a few groups start to put in a large number of new apartment developments, it can really take the edge off that growth going forward. So it is something you do need to consider. The new railway from Brisbane to Melbourne, how is this expected to impact regional New South Wales markets? So that's from Ella. The locations that the train line will go through will see a pickup in demand for housing, and that's likely to impact price growth. So again, really having a look through as to the locations where the train is running through is really important. I know Northern Victoria, say Albury, is expected to do quite well from the train line. The reason it will do well is because we're going to see lots of employment growth, and that those people will need somewhere to rent, and that will really start to put pressure on rental markets. So have a look through those areas, have a look at what the train will do in those areas. You know, if it's just passing through, you're probably not going to get that sustained economic growth, but if it is stopping for some reason to pick up freight or whatever, that may start to drive economic activity and could do it quite well. I do think regional areas, you know, they are great places to invest, but you do need to be very conscious as to what's happening in that market. And one of the problems is that data isn't always that easy to find. And as a result, I do recommend, if you wanted to buy in any regional town, is to go and speak to locals in the area, because they've always got a really good idea as to what's happening with jobs and economic activity and the like. Ella, with the boom levelling out in Sydney and ramping up in Melbourne, what is the third state we should be looking at for a potential property boom? It does seem to be, Tasmania does seem to be doing very well, but it's very small. Brisbane is probably, Queensland is probably the other one that you should be looking at, because it is a big economy. It is a market you do need to be careful in because of supply levels in Brisbane. Houses do seem to be doing very well in Brisbane at the moment, but apartment prices do seem to be coming back a bit. The other challenge, though, if you are investing in Brisbane in a house, you do need to be careful about tenants, because there does seem to be a lot of tenants switching from houses to new apartments because they are getting some really good deals in those cheaper apartments. So being careful with tenants would be another consideration. A question from Hart: is South Brisbane a good place to invest? Look, inner Brisbane, you know, it is an area you do need to be careful with. I think the apartment stock that will do worst in Brisbane will be very generic investment grade stock. That does seem to be the stock that most people are worried about, and does seem to be seeing the poorest price growth. When we have a look at, you know, better quality developments, I mean, they will get dragged down a little bit because of negative sentiment, but longer term, I think they'll do pretty well. I mean, there's some amazing apartments that look out to the Brisbane River, for example, and when you're looking from markets like Sydney and Melbourne, they do look remarkably affordable. So, you know, I think that, you know, if you consider that water views that can't be built out, you know, that's always going to attract a premium compared to something that's on a very busy road with no views, that, you know, doesn't have any sort of interesting or redeeming features. The other thing, so that's Brisbane. The other, and houses in South Brisbane are doing very well. So I think, again, if you're looking at Brisbane, consider housing, because that does seem to be holding out with buyer demand, and obviously because supply is restricted, but you do need to be a little bit careful with demand, with apartments. Okay, so a question from Nate. Hang on. So a few questions around Port Macquarie. Look, I don't know, we're not really seeing Port Macquarie pop up as a location that we're seeing very, very high levels of demand occurring. I mean, very much, you know, we're looking at that part of New South Wales. It does seem to be Newcastle that is doing very, very well. But whether Port Macquarie will do well off the back of Newcastle, you know, does remain to be seen. But at the moment, you know, we're looking at that sort of central northern New South Wales. It does seem to be Newcastle. That does seem to be the area that's doing very well. So a question from Sam. If buying in Sydney in terms of price growth, what areas would you recommend to buy at entry-level markets such as 800 to a million? Look, I guess it just does depend on whether you're wanting to buy a house or an apartment. There's no doubt that Sydney at the moment, it is pretty hard to do badly in the Sydney market. That it is seeing, we're still seeing very strong economic growth, and we're also not seeing huge levels of supply. I mean, obviously, areas that are seeing very high levels of supply, places like Parramatta, South Sydney, maybe be a little bit careful of those markets that, if anywhere, the locations that see high levels of supply probably won't see lots of economic growth. When we look at the types of housing that people are looking in at that price point, I mean, often it's an apartment. I do a segment on Sky every Saturday when we look at the most clicked housing in Sydney and Melbourne. Sorry, not in Sydney. We look at the most clicked housing nationally, and when we look at the types of housing at that price point, 800,000 to a million, the types of properties that do best tend to be in the tend to be apartments, and they tend to be apartments in good locations. So I think last week one of the ones that came up, number one, was a one-bedroom apartment in Potts Point. It had a price guide, I think, of around 550,000. I mean, it's cheap for Sydney, but it was a very, very small apartment. But that's the type of thing that people do seem to want, that, it's inner, it's got all those lifestyle elements of Sydney that people really like, but it's in an affordable price range. So I think at 800 to 1 mil, personally, I'd probably buy, an inner apartment or something quite small inner, but that's me. But I think, in Sydney, as long as you're buying somewhere with low levels of supply, you're probably doing pretty well. So Byron Bay, question from Andrew. Do you have any opinion on the Byron Bay area? It has tended to be variable and appears at the top again. I love Byron Bay. I would love to buy there if I ever had the chance, but I agree. It is quite variable. I mean, it's not as variable as, say, Noosa, which does seem to be a market that is more variable. So Byron Bay, it doesn't come up in any of our sort of most in-demand locations. I do think it is a market, though, that does benefit at times that Sydney's economy is doing very well. That although I haven't looked back at what's happened to Byron Bay prices recently, I would imagine that when the GFC hit and Sydney property prices went down, I would imagine that Byron Bay also went down as well, because I think there's just, there's that really strong link between buyer activity in Sydney and buyer activity in Byron Bay. I guess one of the positives for Byron Bay, when you compare it to somewhere like Gold Coast, it is a market that the local council is very restrictive with new development. So it's not going to be a market where you see, or unlikely to be a market where you see huge amounts of development taking place and really putting a cap in price on pricing. So, for that reason, it does give me some comfort that it's going to be a far less variable market, or a far less boom-bust market that we've seen in the Gold Coast. Okay, so a question on Brisbane within 20 Ks from the CBD. About townhouses and villas. Look, at the moment, when we have a look at Melbourne and Brisbane, anything that's a little bit smaller does seem to be, well, it's particularly apartments. It's particularly hitting apartments. We are seeing apartments in middle and outer ring suburbs going backwards in value because of the high levels of supply in the CBDs. Townhouses and villas, they're probably going to perform a bit differently because they do provide a bigger living space and in some cases land as well. But yeah, again, I'd just be really conscious of the levels of supply in the area that you're looking. So just, there's tons and tons of townhouses and villas being built, and they're all very generic and provide very similar types of housing. That does seem to be the stock that doesn't do well long term. I mean, look, even in Melbourne, Melbourne's developing 18,000 apartments this year, but there's going to be stock that is going to be hard to shift long term, and that's going to be the stock that's like the majority. But if you've got something unique, that has an amazing view or is a bit bigger, or provides some point of difference, you probably do quite well long term. Even to the extent, very long term at the moment, Art Deco apartments in Melbourne are getting quite a significant premium to regular apartments in Melbourne, and I think it's just that historic link and that point of difference that people really like. So Suki has asked a question about the planned railway line from Sydney to Rouse Hill. Do you recommend these areas, or are they already inflated? Look, I'd say they're already inflated. I mean, the time to really buy in those areas is to buy when the announcement is made. That we do find that prices jump quite quickly once the announcement's been made, and by the time the development has proceeded, they're still doing pretty well, but they don't see that big jump. When we had a look last year at the suburbs where we saw the most 1 million plus sales, a lot of them were around Castle Towers shopping centre, and I think that had a lot to do with the train line announcement. So, I do think they're probably already inflated, but, looking again longer term, when it comes back to those things that people want with housing, it's good retail, good schools and good public transport. So if you have a train line or a ferry terminal or a tram stop, you're always, or a really good bus line, you're going to do pretty well. A question from Zoran: do we expect price reduction for units in Sydney? Look, I mean, there may be pockets where we do see reductions in prices. We're certainly not seeing the type of we're not seeing reductions in Sydney like we're seeing in Melbourne and Brisbane. Prices have come off quite a bit for units in both those cities. When we have a look in Sydney, again, if you're buying inner east, if you're buying an apartment in Bondi, you're probably going to do pretty well for quite some time. If you're looking to buy in somewhere like Parramatta, where there's lots and lots of new development, potentially you may be a little bit more restricted for price growth. So again, comes back to, what elements of lifestyle are people looking for, and also those very, very high levels of supply. A question from Piyush: is it possible to get the recording of the session? Yes, definitely. Okay, a question from Julia. What about Werribee and Hoppers Crossing in Melbourne? Any potential for capital growth? So I talked about before the most viewed houses that we look at on Sky every week. It was interesting, a few weeks ago, one of the most viewed houses in Melbourne was actually Hoppers Crossing. So it was in Hoppers Crossing. So I think, those two locations, they are affordable, and when people are looking for housing, they do look for affordability. It does seem to be a really key attraction. I think those areas too, we are seeing quite a lot of offshore interest in those locations in the west, particularly I think more Point Cook, but sort of pushing out to the west, we are seeing quite a lot of offshore interest. I guess the bit that will restrict Werribee and Hoppers Crossing will be new supply. If we have a look at where the majority of new supply is going in Melbourne, it does seem to be going west. So, over the long term, that will continue to restrict growth. I mean, one interesting area actually in the west, which we've done a bit of research on recently, was Rockbank, and Rockbank is an area that is, I think it's actually the cheapest suburb in Melbourne. It's got a median of I think it's actually under 300,000, so it's a very, very cheap area. But Rockbank is going to have a brand new town centre, and it's going to have a lot of new homes as well, so you do need to consider that. But this brand new town centre may change that area. So, again, coming back to what people want in housing, a really good shopping centre does seem to be something that a lot of people like. And I think that may, it may have a little bit of impact on price growth in that suburb. So Werribee and Hoppers Crossing, I think, probably not going to see, the same sort of price growth as we see in inner Melbourne for houses, but we'll certainly do okay, because there's still a lot of people that really want to live out that area, and it does provide affordability. And a question from Eric on Badgerys Creek. So Badgerys Creek out of Western Sydney. You know, I think there's a lot of things that we can talk about on Western Sydney. We've got the Greater Sydney Commission has got a plan to have 3 town centres, or 3 CBDs, I guess, in Sydney. We're going to have the Sydney CBD, which exists already. We're having Parramatta, and the third will be Badgerys Creek. So there's no doubt that Badgerys Creek will drag activity out west. I think it will drag housing out west, which is already happening, but it will also drag economic growth. And I think that's probably more important, that, you know, if you start to see more economic growth in a location, and people having to commute in less, it does provide a good reason to live there. So I think Badgerys Creek, it's a great solution for Sydney, and I do think it will make that part of Sydney see high levels of demand. So let's have a look what else we've got. There's a few suburb-specific areas that I'm not super familiar with. So a question from Ed about Newcastle. So I mentioned Newcastle before. Specifically, Ed's asked about Newcastle University. So university locations do well. You know, we do see very strong levels of rental demand typically. So, you know, it is certainly an area I would consider, particularly if you don't mind lending to students, because obviously they're going to be your biggest market. But obviously, but the other thing that the universities do provide is activity, and they do provide enough people to support things like better retailing and better public transport. So university locations can do very well. You know, if we look in Sydney, you know, the inner west of Sydney has done very well because a lot of students lived there when they were studying. As they've, you know, got jobs, they've decided to continue to live there. They've renovated the housing stock. They've created demand for better schools and better cafes and the like. So you know, students wanting to live in an area can really start to change an area. Okay, inner city. So talking about Indooroopilly, Woolloongabba. Oh, let's go to the lights again. I don't know if I can get it working. No. So yeah, so Brisbane, yeah, inner Brisbane. It's just a market to be very, very careful of. I just think you do need to just be conscious that that high levels of supply have impact on both pricing, and it also has impact on the ability to find a tenant. And you know, if you're an investor in property, there are 2 things you want. You want capital growth, and you also want a rental return. So just be careful in locations where we're seeing very, very strong levels of supply. The other thing too, I guess, to be conscious of is that in Brisbane, although we have seen very high levels of supply, that high level of supply isn't continuing. We're not going to see quite as many projects get up and running over the next few years. So eventually that will flow through, that if you have already bought an apartment and you've seen a drop in prices, it won't last forever. We'll hit a bottom, and then prices are likely to continue to rise. So, you know, that's something also to consider, that you know, markets do recover even if they have very, very high levels of development. So another question from Ed about Ipswich. So how's Ipswich looking? Look, it's not coming up as a really strong demand area on our site, but it's certainly not coming up as, you know, one of the ones that is sitting at the bottom as well. So again, you know, depending on where you want to buy and what you're looking to buy, just obviously be careful to see, you know, see the type of housing that you're looking at. And you know, typically again, we see locations near good schools and retail and public transport do best. And if the house or apartment that you're looking at does have that, then it will probably do a little bit better. Okay, question from Suki. How do you measure demand on your site? Just searches, or those that result in sales? No, we look at it based on searches. So we look at the number of people looking to buy, and we compare it to listings. So it does give us a pretty clear idea of what's happening because we have so many people on the site. So we've got 6.3 million people on the site. Sorry, 6.3 million searches every day. We have 6.3 million unique visitors every month. So if you consider roughly a quarter of Australia is on our site, it is a, you know, a pretty good indication. It's not like we're, you know, surveying 1,000 people, 20,000 people, or even 40,000 people. So, and I guess one of the things that does give us comfort is that it does seem to be flowing through to what happens with price growth and rental demand and all those sort of post occurrence statistics that do show the strength of the market. So I think that's it for today. So thanks for dialing in, and good luck. And obviously you can go onto our site. We do have tons of material on our new site, tons of things to look at, and you know, if there's any questions or anything, just send them through. So thanks for dialing in.